Hey, what's up everyone? This is Darkpole Algo, and thanks for joining me for another educational session on how to trade the stock market. Today we're going to review a premium indicator that I like to use. It's from the folks over at Simpler Trading. It is the 10x bars. I don't use a whole lot of premium stuff, but when I do, there's a reason for it. They put in a lot of work. They've perfected this. There's a lot of development that have gone into these indicators, and that's why I've chosen to kind of represent them and to share them with you in case you're interested in going and getting one. There will be a link in the description, and yeah, let me know if you have any questions. Like I said, we're going to be reviewing the 10x bars. I'm going to do a quick rundown of what the 10x bars are and how we use it. So before we get started though, if you find this content useful, make sure you smash that like button. I'm sick of saying it, smash the like button. Make sure you hit the like button, subscribe, and reach over and turn on notifications so anytime we put out a new stock market video, whether it's training, education, or if we're just calling out plays that rip all day like we have been lately, you'll be notified when we put one of those out. So let's go ahead and jump right into it. Okay, so welcome back. Sorry, I was thinking about something else there. I was going to try to do some sort of funny, goofy, more personable intro, I guess. Let's just jump right into it though. Okay, so what we're looking at is the 10x bars. They were developed by the folks over at Simpler Trading as a way to understand trend strength and quality. The 10x bars will either plot green, yellow, or red based on the underlying calculation of the ADX and DMI indicators, respectively. So, green bars will indicate conviction and trend to the upside, where red bars indicate conviction and trend to the downside. Yellow bars, right, indicate no strong directional conviction, so basically chop, which everybody loves. Bars that show a dot indicate 30% above average volume on that time frame. That indicates a stronger conviction to the move. So, how do we use it? All right. So basically, we use the 10x bars as a way to quickly understand trend, quality, and strength based on some, let's see, what is that? They base it on a more underlying calculation of the ADX and DMI. Don't ask me to get into that right now. It's something you don't want to have to try to figure out, right? The 10x bars also take, that calculation that would be either another indicator or set of indicators and, labels, just more noise to distract you. And it puts that information directly into the charts. So decision making becomes extremely simple and very clean, right? We want to make sure that we do trade in the direction of the 10x bars, right? Because that gives us the best probability of success for the trade. Yellow bars, they're choppy. I don't personally trade them. I try to avoid those. Or if I have to, I'll trade them in like a non-directional manner, like Iron Condor or something that's a non-directional trade until a direction has been established, right? Now, these 10x bars, which I'm about to show you in a minute, they work as a great complement to the Squeeze or the Squeeze Pro. I will be doing a video on the Squeeze Pro and why I prefer it over the regular Squeeze. The Squeeze is part of Thinkorswim, and it's included in the platform. If you'd like it, you can use it as part of this new strategy, right? The way that they work together, it can serve as confirmation, like, hey, Squeeze is fired, right? You don't see a Squeeze firing on this to the right. You don't see any sort of dot indication other than the histogram change colors to indicate a Squeeze may have fired. However, with the Squeeze Pro on the left, we went from green to black, indicating that there is a squeeze taking place, and we actually fired 3 bars into it. Quickly fired off back to a low compression squeeze that fired off 7 bars in for the nice strong uptrend. If you were counting dots here, you would have never even known about it. So, real quick, I digressed. I apologize. Real quick intro on that. Okay. So the 10x bars can be used in conjunction to, stay in the trade longer or get out of the trade sooner. The most important thing about the 10x bars is that I want everyone to understand that momentum and volume is magic when it comes to trading the stock market, right? So if you have no volume, you don't have any buyers, then you can't get in or out of positions. If you don't have any momentum, then you chop back and forth. So combination of those two things allows for a fantastic move like the one you see over here on the right. Now, we're going to jump into this. A typical stock market chart comes, plain Jane like this, where you've got some default colors. You can trade candlestick patterns, right? You can do like a 1, 2, 3. There's a specific pattern where it's 3 green bars, orange or yellow bar, and then a massive move happens after that. If I were looking at this trade and I was thinking, how am I going to get into this? I would have looked for this, this flag breakout, right? Would have got a massive breakout candle. I'm not going to chase it. I'm looking for confirmation. I get confirmation, and my entries aren't the greatest at all time, most of the time. I probably would have waited to get into about this candle here, right? Because this would have been previous resistance, right? Coming in, close above previous resistance, right? This would be the pullback candle. So we have a run. There's a little orange candle here. That's a pullback, so confirmation, and then we would have gotten in here. Right? So I'm trying to get this entire move going on, right? However, I can't get this move because you really only get to see nothing in front of you, right? This is what we're seeing is the past. Like, well, this is what we would have done. But if we were in the trade, we would have been in on this candle here, right? We would have pulled back, and I would have been like, uh-oh, and I'm sure everybody else would have been. We had a pullback candle. We had a smaller green candle. At this point, the psychology of the trade is starting to kick in. Did I make the right trade? Did I get in at the right point? Is the trend over? Did I miss the move? Those type of things. So we get a little hammer here. So, we're thinking, oh, maybe it's another flag forming. Well, then we get this giant doji, this indecision, followed by an orange inside bar. Well, that would become, I think it would become an inside candle. So we get this giant orange candle where we're just chopping back and forth. And now at this point, we're thinking, wow, we went from green to orange, and we actually are starting to, the lows are becoming lower. We're making higher highs, but we're making lower lows. What do? The next time we hit this green or orange candle here, and we see that it's not making a higher high, most of the time, most traders would cut this position at this point right here, right? Because at that point, our risk tolerance is going to start kicking in. We're seeing it's making lower lows without making a higher high, and we're going to try to get out of this position. So this trade would have garnered us. I'm just going to go ahead and get rid of this. Let's remove. All right, just remove that drawing. I'm going to remove that drawing, and I'm going to draw approximately how much this move would have gotten us. So if we got in here, and let's say we got lucky and we got on the first bar, so $1.80 move, we would have held it for about a day and a half over 6 bars, and we would have been stressed out pretty much the whole time, right? So that is just, there we go. That's that move there. So what I'd like to do now is introduce you to the 10x bars, and that's this one on the left. So in the mind of a trader, as we're watching price action, is that going to be right? That's our confirmation. Okay. So we're watching this play, and we're seeing it's red, and we're understanding that red candles are bearish sentiment. We see a green candle pop up. Great. Maybe there's a position, a trend is starting to happen. Our squeeze is starting to fire off. We're just still chopping back and forth. We see the yellow dreaded candles, and we're like, ugh. So we finally get a green bullish candle to fire off after this price action move, right? We're playing price action. We're making higher highs. We pull back with this yellow. Over here it was orange. This yellow confirmation candle. We get in on the green, or the yellow pullback candle. We get on the green confirmation candle. So now we're in the trade, right? And as the trade's going along, instead of seeing chop and stress, we're seeing, hey, We're at continued strong momentum. Green, right? Remember the green bars? What do? Right? What's it? Yeah, they indicate strong momentum and strength, right? So conviction and trend to the upside. Now we're starting to see these dots appear, and those dots are indicating that we have a 30% above average volume on this time frame for this candle. So now we have trend and volume. Trend and volume equal magic. Trend and volume equal magic. Trend and volume equal magic. Okay? So we're continuing the trade. Oh, we got pulled back, but wait. The trend is still valid because the color hasn't changed. We're still getting volume, above average volume on this candle. So we're able to hold it, we're able to stay in this trade longer, hold it through a little bit of pullback, and get this next move up. So we've already stayed in this trade longer and probably got a little bit more money out of this deal, right? So let's just go ahead and watch the trade as it continues to play out, and continues to play out, and continues to play out. Obviously, we know what's going to happen if you've already looked over to this side. I know you have. You've looked over here and said, oh, I'm going to get out over here. Just follow the tutorial. So we're just continuing along, right? Continuing along, and what happens? We see a red bar. Oh, that means the trend is no longer valid. It's probably time for us to exit the position. So if I wanted to calculate the gain from the trade with the 10x bars, let's say we got in there. We were able to hold it to this red bar formed. If we're really good and we got out at the top, that's a $16.50 move, but most people would probably get out somewhere in here. I'm just going to call it at the dot. So it's still a $13.50 move, or 6%. We're in the trade for 12 days and 3 hours over 33 bars. Quite a big difference, wouldn't you agree? So I would too. I wanted to just show that with you. The main reason I'm doing this video is to give you the offer, right? The offer is we're affiliated with Simpler Trading. I'll put a link to the sign-up page in the description of this video. I wanted to do this video sooner rather than later because Simpler is going to be increasing the price of these 10x bars to about $600 on June 16th. It's something that they've already set in stone. John Carter is going to do a last call video on next Tuesday on June 8th. So you can get in then, or you can get in through us. Yeah, it's a great assistance. It's a great tool to have in your tool belt. So thanks for joining me. Once again, my name is Darpole Algo. If you found this content useful and helpful, make sure you hit the like button, subscribe, turn on notifications for my stock market content, and have a great day.